Good morning and welcome. Happy Thursday. I'm Joe Jaquin, CEO of the Patriot Trading Group. And all as I can say is, I told you. But don't worry, it's only the beginning. The rally is here. Gold's up 43. Yeah, you heard me, not 43 cents, $43, 1,387.60. 1380, let's round it up. 1388, and still climbing right now, right near the highs of the day. As the central bank gave out its good big news yesterday, we got a great program lined up for you. I'm going to let you know, and I've been letting you know. I've already told you where it's going. I'm going to remind you. Get ready. And obviously, you know what? I haven't done a good enough job. I really haven't. You don't really see it. You don't see it. You know, it's like a sucker punch. And you don't see it coming because you don't want to. You need to have that head on a swivel. You know what? My father-in-law, Jim, used to say it all the time. You guys remember my father-in-law? He used to say it all the time. You got to have your head on a swivel. Right? It's like think of it like a radar. You need 360 degrees. And, of course, I try to tell you what's coming. But you got to be the one. You've got to make the call. You've got to get ready. 800-951-0592. That's the number. I don't know what you're waiting for. Well, you think the Federal Reserve ferry is going to come and save you? AllAmericanGold.com. That's the website. I don't care where you order. You don't want to call? Order online. As I said, gold's up, silver, all you silver people. I told you, what did I tell you? We needed 15 and a quarter. Guess what? We got 15 and a quarter. Guess what? Yeah, it's still going. We're up, 50 cents now? 14.46. 47 now. 15.47. Let's just round that up, too. Let's call it 15.15. Don't worry. It's not stopping there. Round and round we go. Where is it going to stop? I'll tell you what. After the break, I'm going to tell you. I'm going to let you know. And you think about all of the guys I tell you to pay attention to, and you don't want to. It's okay. I mean, gold's only up, $120 in the last couple of weeks. Don't worry. Doesn't mean anything, right? It's just doing that because. Jim Cramer this morning. And I like Jim. You know I do. The guy's passionate. And he's talking about the central bank, and I'll talk about that. By the way, we did not raise rates yesterday, but just like I told you. Matter of fact, it's so funny. Do we even need this guy? I mean, he literally did exactly what I told you he's going to do. Took out the word patient. Took out the word patient. Getting ready for the rate cuts. Because you know why? I'm going to tell you why. It's not because the data's not good. So Jim Cramer was out on TV this morning saying, man, I am talking to these CEOs out there. There's a deceleration in the economy to the point where the railroads, the airlines, the companies, the lenders, they're all admitting that there's deceleration. They know things have downshifted, Cramer said. They're hoping the Fed sees it. That was this morning. And I'm going to tell you right now, there's a myth out there that they say that, oh, no, it slowed down, but we're still good. We're still good. Right? We're still good, and we're not going into recession. I don't know if we are or not. I think we are. My worry is, I think it's already started. One of the great places to go look, truckers. How you doing? Right? Orders for new semis. And it's amazing now. I mean, they're down 80%. 80% in 1 year. That's not a slowdown. Right? That's a crash. 80%. And so just start thinking, right? Look at the freight from the rail car companies, right? All of these things, these are the great indicators of what is happening and what is going on in America today. So we're going to break it down. We're going to talk about the Fed, right? We kind of already know, right? I already told you, right? Patient is gone. They're gearing up for rate hikes. There was a dissenter. I'll give you all that stuff. But more importantly, where's gold going? Where is silver going? I'm going to give it to you. This will be all technical. Why today was so important? What was so big about the breakout? And where is gold going next week, next month, next year, 2 years? I already told you where it's going in 10. Patriot Radio News Hour. Wake up, America. Things are happening. 800-951-0592. Gold's even higher now, $46. 13. I'm going to round up here, $13.91. And I don't know what's more important because this is the June contract. The June contract's coming to an end. So when I look at the next gold contract, is an August contract. That is the one that's trading, the most right now. That's at $13.95. Okay, I just want to point that out. Okay, so we're going to do, where are we headed now? Why was the breakout so important? And I told you, man, and I knew this was going to happen. And obviously yesterday I didn't do a good enough job to tell you needed to buy and all the charts, all of these things are telling you. I'm telling you where we're headed. Okay, we got a lot more room to go. So when we look at gold, go back to September 21st, 2011. Okay, that was the all-time high. And I call it $1,900, right? And I'm sorry, that wasn't the all-time high. That was the all-time high was a little earlier than that, at 1,900. And really, I think it was 1,895, but let's call it 1,900. It fell to 1,793. Okay, so it fell, about $100 over. I think it was about 6 months in 2011. On September the 21st, gold was $1,793. Now today, gold's at like a 5+ year high today. On the 22nd, so the very next day, gold went from 1793 to 1722. On the 23rd, so this was a 48-hour period, gold went from 1793 to 1722 to 1689. Well, that was a Friday, 1689. The weekend came. On Monday, so 3 trading days, 72 hours, gold closes at $1,598. That was September the 26th, 2011. $1,598. Lost $195 in 3 days. See, and this happens on both the ups and the downs, right? There's big moves, and just a matter of days. Now that 1598, let's remember that number. Okay, that's going to be important later. Fast forward to April 12th, 2013. So let's call it a little over a year and a half later. Gold's at $1,535. That was a Friday, $1,535. So in a year and a half, gold was, kind of just running in place. It was down a little bit, it was down $60, but it was kind of just hanging out. On Monday, one day, gold falls $140 to $1,395. Now, isn't it interesting that I just told you, right? Guess where that August contract is now at? $1,395. Okay? It's not by accident. By the way, all the other months after August are all above 1,400. Okay, so just so you know, I'm getting you ready. Wake up! I want you to do well. Listen, you buy gold for insurance purposes, but it sure doesn't stink to do well with it too, does it? Now, from there, this was 2013. Gold bottoms December 17th, 2015. So that was 4 years ago. At $1,050. And I think the exact number is $1,049.80. But $1,050. Which used to be the all-time high before gold broke out. So gold goes back, double test. 2016, August, gold hits a high of $1,363 and falls. September 2017, gold hits a high of $1,346 and falls. January 25th, 2017. I'm sorry, 2018 now. Gold hits a high of $1,355 and falls. Now remember, I was telling you all last week, all this week, about 1361. Now, it just depends on what chart you're looking at. So the chart here, this is a Kitco chart. They say 1363. I said 1361. Same thing. This was a 3-year breakout. The 1267 number was another one of those chart things. Remember, when it happened, I told you this changes all the charts now. Today's follow through, breaking through 1361, changes all the charts. Where are we headed? Well, I just gave you one number. 1395. We already did it. We've already done it. Where is gold headed now? And you'll see people, they talk about 1,400, right? That's that really, I guess, depending on the chart, 1395, 1,400, it's kind of the same thing. And I told you there's no resistance. Go back all the way now to 2013. This is the new number. In one day, gold went from 1,535 to 1,395. Gold is going to 1535. But here's the even better part about it. That's just out of this year, 1535. Here's the thing, though, when I look at this chart. We may be much higher than that. Here's where I'll tell you. Now, Paul Tudor Jones. I've mentioned his name a couple of times in the last week. And, of course, you remember, oh, my God, Stanley Druckenmiller, Jeff Gunloch, right, Ray Dalio, right? They're all loaded up on gold. They're not loading up on gold for $13.95. They're not loading up on gold for $15.35 either. See, they already know. From $15.35 to $15.98. If gold breaks $15.98, I shouldn't say if, when, and again, I'm already telling you we're at $15.35. There's another gap in the chart all the way to $16.89 and really all the way to $17.93. Going back to 2011. 2011, September 21st, gold was $17.93. The 22nd, it was $17.22. The 23rd, it was $16.89. Then the weekend hit. On the 26th, it was $15.98. So $15.98. There's one day at $16.89, one day at $17.22, and then $17.93. Before there's any resistance. So think about this. There's no resistance from where we're at today to $15.35. None. Now we're going to get some, right, as we get ready to go through that stuff. But there's none there. So every new high tells these computers to buy. See, this is the thing. The algorithm, buy, up, it broke through, buy. Then from 15, the only place where there's any form of resistance is from 1598 to 1535. That little range there. That's not a lot. $60, right? That's one day's move now. Once you clear that number, I mean, we're looking at another $195. So just short term. Between now and let's call it December of 2020. $1,800 looks pretty easy. And I know that's hard, but it looks easy. Because there's just, they had these dramatic drops, which doesn't lead to these resistance. And that's why it took 3 years for gold to finally bust through, because all of these guys know. They all know these charts. Right? I mean, really, right? We've been living on borrowed time for really, now this is year 4. So for the last 4 years, we've been kind of living on this borrowed time. Right? That, oh no, we're going to normalize and do all that stuff. So when you talk about where are we today, you need to add and keep adding. The silver charts are very, very similar. Now the difference with silver is there's a lot of debris in the silver charts from where we're at today all the way up into the low 20s. And really, silver doesn't get real gappy until you're in the mid to upper 20s. But the momentum, gold's going to bring it with it, right? Remember how I tell you the story about gold and silver, they're brothers, right? Gold's the responsible big brother. Silver's that wild child, right? And he kind of runs around, right? They're walking home. Right? They're walking home, and sometimes Silver runs way out in front of his big brother. Other time he's popping daisies and looking at butterflies, and he falls behind, but they always end up together. And I would venture to say that we're probably looking at a Silver price, 25, maybe 30, somewhere in that range. I'd say that, that $25 range. Figure, say anywhere from $22 to $30 in the next 18 months. I mean, that's what the charts say, right? When you sit there and you see the billionaires start talking about, Tudor Jones, he just called out, oh yeah, gold's going to be $1,700. What, is he a genius? Does he know something we don't know? No, he knows how to read a chart. 800-951-0592. Patriot Radio News Hour. We'll be back after the break.
This is the Phyllis Schlafly Report, presenting a daily conservative perspective since 1983, continuing the legacy of Phyllis Schlafly. And now, from the archives of Phyllis Schlafly Eagles, here is Phyllis Schlafly.
The federal test that is considered to be the nation's best measure of trends in reading and math proficiency has just reported the results of George W. Bush's famous law called No Child Left Behind. That law was subtitled An Act to Close the Achievement Gap Between White Students and Minorities. Well, after 8 years, we can now see the result. Both white students and minorities improved somewhat in reading scores, but the law did not close or even reduce the gap. Meanwhile, the Lexington Institute released a new report showing that workers' poor English skills are costing our economy $65 billion a year in lost wages. Over 11 million people in the United States do not speak English well, and that includes 5 million who are in public schools. According to this report, Americans who lack adequate English skills trail the rest of the nation substantially, both educationally and economically. This causes what is called linguistic isolation and certainly makes it difficult to hold a job in America. I feel like I'm some kind of Johnny One-Note in offering my solution for poor reading skills, but it's still a fact that the public schools do not teach children to read in the first grade. There's no point in promoting them to the second grade until they've been taught how to read. And there's only one successful way to do that, by teaching them phonics so they can sound out the syllables of the English language and read big words. Instead of phonics, the schools persist in teaching first graders to memorize a few dozen frequently used words and give the students stupid books with lots of pictures that use the same one-syllable words over and over again. So, when the child gets to the 4th or 5th grade, he is simply unable to read words of more than one syllable. I suggest, like I did, that you teach your children to read when they're at home.
Parents and grandparents jumpstart the education of that child you love so much with a proven phonics course. With Turbo Reader, anyone at any age can learn to read. For free information on Phyllis Schlafly's Turbo Reader, call toll-free 1-866-TRY-TURBO. Open the door to a lifetime of reading and self-motivation. Call 1-866-TRY-TURBO. Thanks for listening, and join us again for the Phyllis Schlafly Report.
800-951-0592. Today's special. We've got 75 $20 gold pieces. 1,450 on U.S. $20 gold. These are the old ones, right? The 1866 to 1907s. I mean, you're sitting there. Gold's what? 1390, something like that. So 1,450, right? You're talking what, $60 or so over spot. I mean, that's value. That's why we're the best around. 800-951-0592. I got it's not me. I don't have it. The charts just kind of tell you, right? Paul Tudor Jones, he's not brilliant. I mean, he is a billionaire, right? Jeff Gundlach, another guy, well, I think he is brilliant, and he's a billionaire. There's a reason why they're in the gold market, and it's not for $13.95. Right? They made the, Tudor Jones made the call $1,700. He actually knows it's going to be 18. He knows. I mean, 16, what did I say? 1689. That's easy. The thing is, there's only 2 other days. Only the thing separating 1600 from 1800 is 2 trading days. That's it. That's how big the fall was. And this is how big the rise is going to be. So when you see moves like this today, get used to those. Right? Get used to those. 800-951-0592. So let's talk about the Federal Reserve. These guys, listen, they can't find their butt with both hands. You know what I'm saying? So Jay Powell comes out. Every meeting's a press conference now. And you know what? Jay Powell's really good when everything's good. Not great when they're not. Right? He doesn't have the gift of, I have no idea what he just said. Right? Very plain-spoken guy. So there's 15 members on the committee. Okay, you got the Fed chair, the vice chair, the 12 presidents, all that stuff. The Federal Reserve, banks. There's 15 votes. Now, only 9 of them get to vote. Okay? And the Federal Reserve chair, he gets a vote every meeting. The vice chair gets a vote every meeting. The New York one gets a vote every meeting, and the rest of them rotate. It was 8-1 in favor of keeping the rate the same, right? Between 2.25 and 2.5. 8-1, and you're like, hey, 8-1, that's a blowout. Not in Federal Reserve. This is the first dissenter that Jay Powell had. By the way, where it came from is also significant. It was the Chicago Federal Reserve. And I point that out because, you know what, it's Chicago, and yeah, things are getting bad. He wanted to cut rates now. Now, that left all the non-voters. And in that, so they all have this, they do this dot plot, right? I don't know how this thing even came into existence. It's another thing they made up. So the dot plot started 10 or 12 years ago, something like that, where they all, forecast where they think interest rates are going to be, right, in the future. So eight governors think interest rates are going to be lower before the end of the year. 7 of the 8 think it's going to be lower by 50 basis points. The 8th one says a quarter. So of the 15, 7 said 2 rate cuts. 1 said 1 rate cut. But in his press conference, Jay Powell said, hey, the other ones, said now rates are going to stay unchanged for the year. He kind of let it slip. He goes, well, they're all leaning, and he said the word all, we're leaning to, I think we may have to cut. They just weren't ready to do it at this meeting, right? We want another 6 weeks of data before we admit it. What is the Federal Reserve's track record? What is their track record? Right? When they say that the interest rate's going to be X, where does it end up? When they say GDP is going to be Y, where does it end up? I'll give you a simple case in point. Remember how we're going to normalize the balance sheet? right? And they said, hey, we're going to go all the way down to like 2.8 trillion. Remember? Or did you forget? Remember how we were going to normalize rates? Hey, we want to get, somewhere around 3.5, they said. Well, let's see what happened. The bond sell-off, what did we get to? Like they missed that by $1 trillion. Right? We didn't get to 2.8 trillion, did we? Nope. That didn't, whoops, missed it. How about the Fed's funds rate? Did we get to 3.5? Nope, sure didn't. So, if they're really willing to admit, hey, we're going to have to start cutting rates, how far do you think they really got to go? Based on their track record. Right? And once again, the central bank is well behind the curve to the point where they got to get Jim Cramer to come out and tell the central bank, hey, let's not kid around here. You better cut rates next month. Right? Cramer, you tell them. Right? The airlines, the freight, the truckers, the retailers, the manufacturers, right? They're all talking to me. And things have slowed, right? And of course, they've slowed a lot. How about, just as a tipping point, by the way, earnings today, all bad out of Kroger, Darden, which is your Olive Garden, Carnival Cruise Lines. Don't worry. How about U.S. Steel? U.S. Steel announced they're closing 2 blast furnaces here in the United States in Gary, Indiana, and Escorts, Michigan. Does that sound like we're coming back? Or are we going the other way? 800-951-0592, $14.50 on $20 gold pieces. I know. You don't have to tell me. Right? I was thinking about buying yesterday. I was thinking about buying all week. But I didn't. Right? We tell you all the time, right? If you don't buy today, it's going up tomorrow. You know that. And I know what all of you are thinking. Well, if I buy today, it's going down tomorrow. It may. But this is why I put this special out there today. Yesterday, $20 gold, right, your Liberties, your Saints, were $14.70. Okay? Gold's up $41, $42, $43. And I've got them at $14.50. So you can buy today guilt-free. Right? Even if we have a pullback tomorrow, which I don't know that we will. Tomorrow, it's Friday, it's quadruple witching, so it could be insanity. Could gold be $1,500 tomorrow? Yes. Could it be $13.50? Sure. My guess is probably not, but it could. Yeah. I don't know. Did I say yesterday I think gold's going to be higher today? Yes. Did I think it was going to be, right, $13.95? No. Am I surprised? I'm not. But remember, just be patient. You're still, all things, think about what we talked about earlier. $13.90, $13.95. We're talking about $1,800, $1,900. You're not buying anywhere near the top. By the way, right as we go through these things, now you got to start talking about, okay, what's the new all-time high in gold going to be? Right, and you got to start looking at that. From 250, we went to 1,050. Right, kind of 4 times. And then we went to the 1,900, right? And we go all the way back to that 1,050. And I think it was, 2 or 3 weeks ago, I told you 1,050 is this decade's 250. 1,050 is this decade's 250. Right? That was 250 gold. And I remember, gold hit 250 and then it didn't do anything. 01, 02, 03. I mean, even in 04, gold was only like 350 maybe, somewhere like that, where it really started going. Right? Remember at the time, the all-time high was 800. And now we sit here and we look again. Look at what we did. Right? It's bottomed in 2015, 2016, 2017, 2018. We kind of, just hung around. We were off the bottoms. And then, bam, now it gets into gear, right? We kind of finally got out of second gear. Right now we're into third gear. And we haven't even gotten to fourth and fifth gear yet. So this is, we're setting up here when you talk about, if you're sitting there thinking, hey, and catching the bottoms and all that, it's impossible. It can't be done. This is a great entry point. It really is. And like I said, I put together this item to hey, even if gold goes down 10 or 15 bucks tomorrow, it's still, you bought fantastically. 1,450 bucks. U.S. $20 Liberties at 800-951-0592. I'm going to give you examples of why I think they're underestimating. Right? Wall Street they want to, hey, if we can just cut rates, we can keep this thing going, can we? This year has been a rocky alarm bell in the trucking industry. After a raucous 2018, 2019 have seen retailers and manufacturers moving less and less freight according to the Cass Freight Index, which, by the way, when it comes to indexes, there's not a better one. Freight rates have dipped year over year for 6 months straight. Loads on the spot market, in which retailers and manufacturers buy trucking capacity as they need it, rather than through a contract, have fallen by 63% year over year. So think about that. Hey, I need a truck. Let me go buy a truck. I got to get this freight moved. Down 63%. Rates have dipped for independent trucker as well as major companies. Rate for van loads sank 20% in May year over year. Earnings of big and small players alike are getting hit. Factory orders are continuing to decline. Chad Boblet, he's an owner-operator, said some truck drivers are seeing an absolute bloodbath. Trucking companies now are starting to declare bankruptcy. The largest so far, New England Motor Freight. It was the 19th largest trucking company in the segment. Falcon Transportation shut down completely this year, laying off all of its employees. We have become increasingly convinced. Right now, they're talking about maybe we could have a bounce back in the second half. Not according to the industry. Convinced that freight is going to remain very weak through 2019. Unfortunately, then they said, and 2020 as well. Just add another log to the fire. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Got every line open. Arlene just got off. Every line is open. Take advantage. 1450 at 800-951-0592. 1,450 U.S. $20 gold. Gold's up $43 at this moment. And I actually put it on sale for $20 less than it was on yesterday at 800-951-0592. Now, this just hit the tape about 20 minutes ago. This morning, Iran shot down one of our drones in the Gulf. Iran says the drone was in Iranian airspace. We said it was in international waters. Right? Who knows? Right? I don't know. The president, in speaking to the press, said that Iran has made a very bad mistake, and asked whether the United States would attack Iran. He responded with, "You'll soon find out." So, again, I hope we're not going to war. I don't know if there's going to be a response from us. I think there needs to be, right? I mean, I'm just thinking about it, If they're shooting down our drones, they have we're saying, hey, they were behind the attack on the cargo, right? The oil cargo ships, and if they weren't behind it, their buddies were the ones behind it. They were behind it one way or another. Whether they did it directly or as one of their buddies, they're behind it. If there's a response from us tomorrow, today, right? I mean, I think obviously that would be a further indication. We can see gold spike again, but you don't know, right? I mean, these are the unknowns. Remember, we talked about at the beginning of the program, you got to have your head on a swivel. And all of those things, just another thing, but a distracted thing. Here's what's real. Everybody's out there, they're all nervous. They want it to get better. I want it to get better. You want it to get better. Here's what we know. We've definitely slowed down. Are we in a recession? Are we going into a recession? I don't know. It looks like it. I mean, the history of the central banks, right, is, because they miss everything, right? And I started this show off by telling you it feels like 05, but it's different, right? Because it's not the housing thing, right? Because, everyone lost their house, never got another one, right? Right? We're a nation of renters now. But we're loaded with debt. I didn't even get to today. More people falling behind on credit cards, right? More people not paying again. The average credit card balance just skyrocketing now, right? It's getting harder and harder. These aren't good signs, right? Then we talk about freight indexes and what truckers are getting paid and what the demand is and how far it's fallen. And you just start, you look housing sales, car sales, right? Get ready. Here's what I do know. The dollar's going lower, and I think a lot lower than a lot of people think, and that's good for gold. That's good for gold. 800-951-0592, Patriot Radio News Hour. Thank God it's going to be Friday tomorrow. We'll see you all then.